All right, stock market analysis, projections, important information for you to consider before using our information. Please do read this slide. Talks about our approach to the market and how you then could use the information that we provide, and always want to stress trade ownership. No matter what we say, no matter what anybody says, it's important that you make every trade your own. All right, stock market, multiple time frame analysis, and that is what we do. We do that so that we have the information that we can then use for projections in time and price, and of course, direction being up or down. So that's what our analysis is made up of, the ability to use multiple indicators, and our cycle analysis, which is essentially repeating action as far as waves of money flow, money coming into the market, money coming out of the market. And we use all of that, I would say, complex information to come up with our projections. I'll show you proprietary indicators and also look at the MCM as we look at this. I think that what's going on right now, as I said in the beginning of the show, is really interesting because we have a very narrowing breadth condition in the market, and even today as the market is moving up, we have declines right now are about 750 advances to about 1900 declines. This is not the kind of market that has the ability to hold, to keep its upward momentum. To do that, you need to have an expansion into the out of the mega caps, essentially, or where they kind of hold, and then into the lower cap, mid cap, lower cap stocks. We are not seeing that. We're not seeing good breadth. And today, as the market's moving up, this could all be about people buying ahead of the 10-for-1 split for NVIDIA. I don't really know how to explain the breadth being this negative and the indexes being up as we're seeing right now. But I think that we're going to either have to see something change significantly and reverse the problems I see in the market forming here, or the stock market overall is going to start moving lower. Let's take a look now as we look at our proprietary charts. What you see here is how our members get our level 4 charts. Excuse me. We're looking at SPX, NASDAQ, and the Russell. So all I do is I have to blow up the S&P 500 chart, and then there's arrows up on the top here that I can advance through all of our charts just by clicking on those, which gives you a good sense of how easy it is to really use this. Now, the market's moving up as we anticipated, as we are in this period of strength. We thought the period of strength was June, July, potentially into August, June, July. As we got the earlier upturn here than we expected, you could see it's on the left side of the ideal trough in here. Then we started to get indications that low was made, and then we, of course, turned positive and started to project to the upside. Upside projections were, number one, that we would get above that level right there because that's the highest probability. And then looking at where these fib extensions are, which is right here at 5,400. We got up to 5,370 today. And then these monthly extension right there, which is at around 5,450. This monthly extension's at around 5,560. So this whole area in here is an area filled with reasons to believe that, well, you have a target and you have resistance. Now, I make a note over here that when you get up into these levels, you have historic valuations, market cap to GDP, 200%. Maybe right now it's in the high 180s. And that would be the second highest ever in history before we had our last bear market. And valuations, it's just to speak to them a little bit more. At the high in 1999, before the dot-bomb bust, the market cap to GDP was 157%. So we're at historic levels. This is all about the government, the Fed, creating a total bubble economy that we're in right now by all the deficit spending and the post-pandemic actions. So there's a ton of risk here. Once this narrow upside leadership goes away. And we know that will happen at some point. Right now, we're going to maintain our upside projections that we see in here, which, you know, this is 5,400, this is 5,450, and somewhere up here into the mid 55s are all possibilities, unless we see the beginning of breakdowns. Now, I only see that now in the Russell so far, and that's what the first warning is to me. Let's look over here as now, again, the momentum in here is strong on the weekly chart. On the daily chart, well, we still have strong momentum. On the bottom here is the option bias study. Now, if you use that option bias study to bias your option positions, you will see that it keeps you in the right direction of the market. There was a correction in here that you can see where it turned red, but then turned yellow and then turned green again. We have this upward projection right in here. We call this the slim cloud. We create two channels in here, where the middle part of the channel is the highest probability move, and that was to take out the high right over here at 53.41, which we have easily done. And there's that weekly extension right up over there at around 5,400. So this, you could see, still moving up, and conditions of the first momentum thing I'll show you is the option bias study, which is a very unique study with multiple time frame conditions in there. Those inputs give you a great sense for when the market is in a particular trend and momentum that helps you bias your option position. So bullish, you can see this is positive, and this was updated this morning. On the weekend, I'm going to update it again because it's made a little higher prices. So these are slightly off from what our latest post is as far as where the supports go. So look here at the momentum. This is the slim ribbon shown in an area chart, and on the bottom, the slim ribbon PO. You get a good idea when the slim ribbon PO is in green and bullish condition. You get an up arrow. It says that the momentum is resuming to the upside. Here you had one to the downside when the market was correcting, and then it turned positive again and giving you those good positive indications. Again, the S&P 500 giving you positive readings, positive structures, everything is positive. This is the 2-hour chart in here, and on the bottom right over here is the market condition indicator that trades between minus 100 and plus 100. When it's in the swing zone, it gives you warnings between 25 and minus 25. Well, it hasn't been near that. And when it crosses it, it gives you a signal which is bullish or bearish. You'll see that in a moment, because the Russell has done that. So S&P 500, clearly, when we look at it, positive. Here's your NASDAQ pattern right in here, and you could see these positive cycles, bullish cycle, higher highs, higher troughs or lows, making the low a little bit late here, making the low a little bit early here, all of those very much in line. 34-week moving average often gets tested. It didn't quite get to it over here, as it didn't quite get to supports. And that's probably going to get tested way out over here somewhere. Right now, we're looking at rising momentum, positive momentum here on the weekly, coming up near that first target right over there, which is 19,175. Then you have 19,225, and then this one right over here at 19,730. So these are all the upside target resistance areas, and we have two projections in here, as we often do when it's positive, a positive one and a more positive one. So this all still looks positive in the NASDAQ. No reason to be afraid when you look at that. Here you could see it's moving up the top channel of the slim cloud right over there, which is what happens when it's looks pretty good. This came a little bit later than we expected. Here you could see the option bias indicator also positive right here. So that gives you a good indication that you should still be biasing your option positions in the indexes on the long side. Here is momentum. You're getting the same thing as you saw on the S&P 500. Two upside resumption signals right over there, and the slim ribbon is built in here on the area chart. We do it this way on this because it screams at you the momentum conditions as they exist. So again, the NASDAQ is positive. Here you see on the market condition indicator on the bottom that it is at 90. It hasn't been even close to that swing zone in a long time. and the slim ribbon here positive. As you see, the slim ribbon PO actually giving a 2-hour resumption signal here earlier today. So as the market remains strong, you can see this. So that's a look at the NASDAQ and the S&P 500 looking great, right? Now here is the Russell. This is giving a different story. Now, momentum in here is still positive on the weekly chart. And you can see the weekly chart in here. These harmonics are gorgeous when you look at that. Why do I say that? Well, you can see there are 1, 2, 3 cycles that are beautifully rhythmic in here. If you look at the dominant one right in here, you can see the trough here and the trough here. If you look at the half cycle right in here, you can see the trough right over there and where they both came down together. When the dominant and that half cycle come together, you get the biggest downside moves. You see that right over there, and you see that right over there. Now, where are we right now? Well, you can see the quarter cycles. They're not quite as easily, but you can see this one is perfect right there. This one a little hard to read because it was only a brief upside move. We call this a left-hand translation, and then down. Here's your quarter cycle here, your quarter cycle here. Gorgeous, right? Here's your quarter cycle. This looks like it may have peaked, but we don't have momentum turning over yet. We're just getting a bit of a warning in here as you had this engulfing right there and then beginning to turn to the downside. So you could see while the S&P 500 and the NASDAQ, here's your NASDAQ making higher highs right over there, you could see the Russell underperforming right there. That is significant when you see that underperformance. But here is the worst part of it at all. I'm going to go to the daily chart and look at this. We have now established that the slim cloud is now moving to the downside. This to me, like DJV asked me early on, what is it about your intuitive sense that says that, there's something going on that is fighting the upside momentum of the broad market of those indexes? It's this. And the fact that you get a day like today where the S&P 500 is up 15 points right now. The NASDAQ is up after being weak, but you have a significant negative breadth in the market today. So this is a warning to me. And you can see in here where this was positive, but now it's hard to see. This is now yellow here on the option bias study. So this is turned neutral right over here. And when I look at the momentum now has turned negative on the daily, as you could see right there. So this is all important. You have this downward turn in the weekly. You have this, but that's unconfirmed. You have it on the daily that's telling you there's trouble in the weekly because it wouldn't break down like this unless there was a downturn going on in the longer term time frames. Now, this is the last high of this cycle right over here at 2088.15. If it got above there, actually there's a 78.6 I don't have in here. That would be the warnings to me that, this is really extended to the right side and the buyers are coming back in and breadth is expanding. That to me is a low probability. So we had a bullish cloud in here before. On 6.4 it was removed because of the breakdown we were seeing. On 6.7, which is today, we added the negative cloud in here, which points to the downside. So this is that warning. You have this condition right over here where you have the slim ribbon PO turning red right over there on the bottom, and the lower tiers of the market are saying that they're not around right now to support this upside move. Can NVIDIA and Microsoft and those kind of stocks continue to drive the market to the upside? It's doubtful. There's going to be something that changes in there. So this is important information in my opinion. Now here is the market condition indicator, and that has now crossed. This is the test where it gets into the plus 25. And when it gets through the minus 25, it's negative. What it's saying to you is that the longer term conditions are starting to no longer give support on the upside, and if anything, are giving support to the move on the downside. Negative momentum here, as you can see, and that is a look at what I think is the first sign of deteriorating conditions in this market. Now, one other thing that I want to look at in here as I go back to these charts over here, is the MDY, and the MDY is the Midcap index. And here's our cycles in here, and Arby did a great job updating this. And we're starting to get a downward turn and negative momentum right over here in the mid caps. This is the RUT cycle, the RUT right there, where it's starting to break down and come down. This is matching that right in here. This is another warning to me that there is a decline ahead in the stock market because it's not supported by enough stocks. And if anything, this downward turn says, well, there's likely to be a move down here from somewhere soon, maybe next week, into the early part of July, just on the short term. And then we have to see what's going on right over here. Momentum in here, as you can see, has now turned negative right there, as the reversal scout has turned down on the weekly chart. And that is a sign that this cycle right over here has made a double top and will not move up into these areas right here. Right now, this is a negative warning. You can see the cycle shapes as RV has in here beautifully. And this one making this double top and then turning down here. There's reason to believe that this is something negative to look at, and that is important. I'm going to switch over to the market condition monitor, the MCM, and our new pro version is going to be launched next week, which will allow you great ability to be notified when these things begin to change. You can see right in here what's going on is that the S&P 500 and the NASDAQ have both been very bullish here on the short term. So if you're a short-term trader, that's how I have it set up. But you can see in here the IWM turning slightly bearish, the Dow at neutral right in here. And that is showing you that there's this deterioration in the conditions. Our algorithms are built in here, and that is telling you that there are things changing. If you were really a shorter term trader, let's say a swing trader, intraday or over a few days, you'd look at the near term and you could see very bullish, very bullish. Look at the IWM, very bearish. The Dow here in the short term, though, is still holding at bullish. So let's just take a look at really quickly on the short term some of the other trade setup conditions in other groups. We'll just look at the top ones in here that are very bullish, and you can see India, XLV, XLP, IBB, Applied Materials, and of course SPY sitting at very bullish. If I switch to very bearish, you can see LIT, Wynn Resorts, COPX, Home Depot is bearish, Jets is bearish, Abito is bearish. Wow, that's interesting. And EWW, the Mexican market there. So you get an idea. You can just scroll through here and get a good sense for the conditions of the market. And right now we're looking at still bullish conditions in the S&P 500 and the NASDAQ and the IWM switching over to the bearish right now. And this is just another way to read the same thing that I've been sharing with you, that the market is starting to give a sign that this upside is not going to be able to go a whole lot further. A lot of resistance up above, and also a pretty good sign that the breadth that's necessary to keep the market going is not showing up. And contrary to that, it's actually getting worse. So that is a look at my analysis for the stock market. I want to make sure that you have the opportunity to try out our level 4. The special is only for the next week now. $99 for the first month. It's non-recurring. So you sign up for it, you'll be able to see basically everything that we put out there. Like there's 1,000 videos in there. I mean, there's so much for you to learn. There's almost 300 evergreen videos of things that I've taught over the last 9 years that you'll be able to watch there. It's just unbelievable. Click the Learn More button at the top of askSlim.com. and you'll be able to get all that information. Everything in levels 1, 2, 3, and 4 is all there for you. The only thing you don't really get with that is our day trader service, which is a separate service. but you will absolutely see everything other than that we do. $99, non-recurring. Try it. It's going to not renew. And if you want to stay, you'll be offered another special. So that's your opportunity in there. And start learning from our team of pros. It's incredible what we bring with almost 100 years of experience between us. Of course, I have 50 of those. These guys are certainly not a slouch, guys and gals, because they're all great.